Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Angela Osborne, Chief Operating Officer of Bluespring Wealth Partners, to discuss what's next for wealth management firms in terms of efficiently servicing clients and attracting and retaining the next generation of advisors. Angela, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. It's a pleasure to be here.
You got it. And let's talk about how to efficiently serve clients based on their unique needs. How are you seeing the role of the financial advisor evolve from this perspective?
Yeah, I think it starts, Jill, with being crystal clear about who their ideal clients are, so they can avoid the distraction of being all things to all people. And at the same time, you have to avoid a one-size-fits-all approach, because not all clients are equal and not all clients need the same thing. So if your service model assumes they do, you may not be actively listening to your clients' needs. And as a result, you could be constraining your business's ability to grow. So start by getting very clear on who you're looking to serve and what are their personas. Clients will always want the best, however, their needs vary. So the next step is really in structuring your service model to meet those needs, delivering value at each point, and importantly, charging appropriately for the value that you're providing. Segmenting clients into the personas that share characteristics will allow advisors to personalize the service that they want to deliver to each group, but do it in a scalable, efficient way by aligning them with the services. And that personalization not only results in higher client satisfaction, it also allows them to scale and subsequently align pricing with the services being delivered. It also allows advisors to align their team and their skill sets to those services being delivered. So advisors should keep in mind that the exercise isn't a set and forget activity. Regularly revisit it, think about how your services can be improved to meet the evolving needs of your ideal clients, and in turn, how the pricing should be tweaked to align.
And Angela, how are financial advisors and their firms leveraging Bluespring's model?
In a number of different ways. We provide a number of different services and capabilities to basically free up advisors from those activities that distract them basically from being able to spend time with their clients. So you can think of the activities like accounting, finance, HR, payroll, benefits, technology, core parts of running a business, but also key activities that take away from spending time with clients. So it's a little bit like activities that provide a time machine to be able to spend more time with clients. And the expertise around those as well to help firms scale and get to the next level. You know, it's the old adage of what got you here isn't going to get you to the next level, Jill. So all of those capabilities and industry-leading business consulting on how to apply them and evolve as the business grows. Those are key parts of what we offer.
Let's talk about attracting and retaining talent in the M&A industry and working with the next generation of advisors. What is it that firms need to think about when they want to attract the best talent and, of course, keep them at the firm?
Yeah, I think, well, first of all, it's true. The average financial professional today is usually a little older. And so I think it's critical for the industry and for the firms within it to be thinking about the next generation of talent. We all know what the challenge is. I think first and foremost, this next generation need to become really good financial advisors. And folks like the Center for Financial Planning have done really great work there to attract very young talent into this industry. So graduates, for example, into the profession. And then I think having arrived and having really honed the craft of being a great financial advisor, coaching the next generation focuses on two key aspects. One is, how do you step up to run an RIA business? It's one thing to be a great financial advisor and another to run the business. And secondly, how do you become a rainmaker of tomorrow? So how do you continue to grow the business? Firms may already have someone internally, or in our case, we may help them find that next generation of talent and then put them through training such as our Successor Academy. So Jill, you can think of that as an MBA for running a practice. That Successor Academy is a 2-year program designed to help firm owners preserve the legacy of their firm, putting next generation leadership through that program It focuses on developing the next generation of wealth management leaders by cultivating the leadership and management skills they need to transform from really great advisors or really good practitioners into worthy successors and leaders of a business. So they participate in studies, in business simulation, peer-to-peer learning as part of a cohort. They think through real-world challenges, problems, and opportunity associated with running the business. I think coaching and learning is one key part. The other part is incentivizing. So it's important to offer incentives that entice key players beyond the top of the organization to stay and continue to grow the business. And the next generation of leaders are probably the most important after that. So ensuring next generation have the opportunity to participate in growth and the earnings of a business increases the likelihood that they'll stay on board and stay engaged post a transaction, for example. So this includes effectively communicating to them of the rationale behind a deal, its terms, expectations, post-acquisition, and why it's a positive step for the business. I think offering an equity-like model is a way to successfully keep key leadership members, especially the next gen, engaged in the business. That gives the next generation of leadership the chance to replicate the initial sale of a business further down the road. So with this type of structure in place, there's an opportunity to offer them a bite at the apple that is their successful business by selling their flexible equity-based ownership stake to the next generation behind them. So generation 3, 4, and so on. And ultimately, it's about training the next generation of rainmakers. So teaching them to run a business, lead a business, and grow a business.
Which is so interesting because it goes back to your original point of this is not a one-size-fits-all industry. So when you think about the Successor Academy, yes, it's great. It's impressive if you get an MBA or if you get your CFA, but this is so specific to the advisor business. It's really tailoring to what they need and might not necessarily need, such a generic MBA training, if you will.
Correct. And I think one of the great things about, a community like Bluespring, and there are other communities like this out there as well, is that peer-to-peer sharing of information, right? It can sometimes feel very lonely at the top when you're leading a business, and it's great to have a cohort of other folks who are going through it or who have been through it, who can relate and provide their mentoring and coaching and guidance together. Shared learning, if you will.
Mm-hmm. All right, Angela, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.